These three indicators are major drivers for the dollar, the stock market, and market sentiment overall, where the market will be watching forward guidance closely, especially given the economic uncertainty. If current dynamics persist, EUR/USD should continue to strengthen, meaning we'll keep our bullish targets for this week. Hello everyone, my name is Isaac Martinez, trader and analyst at xChief. Welcome to this week's market update, where we will explore the key fundamentals moving the markets and dive deep into technical analysis for the dollar index, the S&P 500, EUR/USD, and Bitcoin. Stay tuned, as today's insight could be crucial for navigating the volatility we are currently seeing across the financial landscape. As always, we will start with the economic calendar. Don't forget that the hours you are going to see are based on GMT-5, which is also applied for the New York trading session. This week starts on Tuesday, April 29th at 4 p.m. with the JOLTS job openings report from the United States. This shows how many jobs positions are available and gives us an idea about the strength of the labor market. A higher number usually supports a strong economy, while a lower number could suggest some slowdown. On Wednesday, April 30th, we have important events all day, starting with the German preliminary CPI. This is the first look at inflation data from Germany, one of the biggest economies in Europe. Inflation levels help traders anticipate future interest rate moves from the European Central Bank. At 2:15 p.m., we will see the ADP non-farm employment change from the United States, a preview of job creation in the private sector before the main government employment report. Strong numbers are usually positive for the dollar. At 2:30 p.m., the United States will release the advanced GDP report for the first quarter. This shows how much the economy grew during the first 3 months of the year. It's one of the most important numbers for understanding the overall economic health. Also, at 2:30 p.m., the employment cost index will be published, giving us more information about wage growth and employment costs. Later, at 4 p.m., we get the core PCE price index, which is the Federal Reserve's favorite measure of inflation. This can directly impact expectations around interest rates. On Thursday, May 1st, at 2:30 p.m., we have the weekly unemployment claims from the United States, showing how many people filed for unemployment benefits. Lower claims usually point to a stronger job market. Then at 4 p.m., ISM Manufacturing PMI will be released. This index measures the economic health of the manufacturing sector. A reading above 50 means the industry is expanding, while a reading below 50 suggests contraction. On Friday, May 2nd, at 2:30 p.m., we have another key group of job data. The average hourly earnings report tells us how fast wages are growing. At the same time, we will see the non-farm employment change, which shows how many new jobs were created and the unemployment rate. These three indicators are major drivers for the dollar, the stock market, and market sentiment overall. This is a very intense week full of important fundamentals, and traders need to stay alert because these releases can generate strong market movements. Now we will continue with the most important fundamentals, and we will start analyzing the markets because they closed the week on a strong note, with the S&P 500 rising 0.7% on Friday and ending the week more than 4% higher, fueled by optimism in the tech sector. The Nasdaq gained 1.3% and the Dow added 0.1%. The rally was led by Alphabet, which reported better than expected first quarter earnings and announced a 70 million share buyback. The company also reaffirmed its strong commitment to artificial intelligence development, giving investors confidence in continued demand for AI infrastructure like chips and data centers. Despite some legal uncertainty over an upcoming antitrust case, tech stocks rallied sharply, with Nvidia and Meta also moving higher. On the other hand, Intel dropped over 6% after weak guidance overshadowed stronger than expected earnings. Colgate-Palmolive gained 1% despite cutting its full-year sales outlook due to expected tariff impacts, as earnings still beat estimates. The earnings season will continue next week with major updates from Microsoft and Apple, where the market will be watching forward guidance closely, especially given the economic uncertainty. Meanwhile, political developments put some pressure on equities. President Trump stated in an interview with Time magazine that he would consider it a total victory if the US maintains tariffs between 20% and 50% on foreign countries by next year, dampening hopes of quick relief. Earlier sentiment had improved on reports that China is preparing a list of US products to potentially exempt from its retaliatory tariffs. This move was seen as a sign that Beijing might be looking to ease tensions. After the optimism in tech and trade, let's move to the crypto market, where Bitcoin keeps leading while altcoins struggle. Analyst Pat Shang says the market is in single core mode. Bitcoin rises, but altcoins are stuck in a liquidity desert. A lack of strong narratives and slowing venture capital's investments have hit altcoins hard. Bitcoin's dominance has climbed to 64.4%, its highest in 4 years, while the altcoin market cap is down 22% this year. Zhang warns that until Bitcoin peaks and consolidates, altcoins will likely continue underperforming, similar to the early 2019-2020 cycle. Now let's head to the technical analysis, and we'll begin our weekly review with the US dollar index, which reflects the greenback's relative strength. Price has failed to make a new higher high this week. That sets us up for a structural failure, where price is likely to retest the previous support zone, a liquidity sweep, at which point we may see a reaction. We're talking about this point of the price right here. If instead the price breaks below that liquidity low and keeps falling, the downtrend in DXY should remain intact, putting us in a very bearish scenario. Catalyzing factors include the ongoing US tariff disputes. If they aren't resolved soon, they could extend the downside. So considering this potential downward move, the bearish target for this week are 99.22. The second one is located here at 98.863, and the last one, which will be pessimistic analysis for the DXY, will be try to reach the last low located at 97.92. For those expecting a bounce, watch the bullish reaction zone around 99.684, where we saw absorption and a temporary halt in selling. Above that, upside targets are 99.94, 100.276 and 100.839. If fundamentals news support the dollar this week, these levels will be our pivots for any rally. Moving on to the equity markets, let's look at the SP 500. We've seen the price likely establish a swing low around 4,835. Over the past several sessions, that floor has prompted a roughly 40% recovery, so it's probable that the index remains bullish and pushes toward upside targets before any meaningful pullback. Upside targets for this week are located at 5,565 as the most sensitive part of this fair value gap, 5,695 and 5,786. If you are playing the downside, here are the key zones to watch this week. 5,324, because we locate here a vacuum block, or also known as a liquidity void, that price may revisit and fail. We also have 5,186, another vacuum block that is located here, and 5,103. A sustained drop will be tough without a clear fundamental catalyst, especially given current dollar strength and broader US market drivers. Remember our earlier discussion on fundamentals. Nvidia's recent surge has underpinned much of this SP 500 recovery. Now let's turn to Euro USD. The move has remained very solid. Euro USD is attempting to hold the underlying up structure we've discussed over recent weeks. If current dynamics persist, Euro USD should continue to strengthen, meaning we'll keep our bullish targets for this week. Bullish targets are located here at all these highs that I can see: 1.144, 1.154 and 1.157. On the downside, if you are looking to trade bearish, the key zones to watch are 1.130, 1.126 and a clear fair value gap with an exact price located at 1.114. Now let's turn to Bitcoin. We've seen a compelling bullish impulse and a clear change of structure. Price hasn't stopped climbing, nor has it retracted when given the chance. That suggests the uptrend is likely to persist with the following bullish targets over the next few sessions. The first clear target that I can see here is located at 99,517, a swing high with concentrated liquidity. $102,599, which is the next significant swing high, and this bullish case assumes BTC holds above $91,685, which also serves as our first bearish invalidation level. If price loses that zone, look for those bearish targets. We can see here a clear fair value gap, $89,698 liquidity cluster below current price, which is also related to this fair value gap that you can see here, and 86,175, a deeper liquidity void. Historically, when Bitcoin musters strong momentum and skips pullbacks, it often powers onto new all-time high. For that reason, be very cautious with short positions. Bullish continuation remains the higher probability path. Thank you for watching. If you found this analysis valuable, make sure to like this video, subscribe to our channel, and click the notification bell so you never miss an update. And remember, you can register at xChief.com to trade with a trusted and professional broker. See you in the next video.